Hello again, number curious friends, and welcome back to the channel that turns spreadsheets into stories. Let's continue our journey through financial statements and have a look at the reporting of one of the listed companies. Today we'll have a look at the financial statements of Unilever, and we'll try to build some analogies to our Apple business. To start with, all listed companies and a lot of other entities publish their financial reports on a regular basis. Some even do that quarterly, based on the regulatory requirements. In most cases, annual financial statements of these entities are audited. For larger companies, annual reports may be quite big. For example, annual report of Unilever for 2024 has 305 pages in it. In addition to the classical financial statements, annual report of Unilever includes statements from management, some commercial data, details on business segments, description of business developments and some programs undertaken by management during the year. We will include a link to the report in the description to this video. Check it out. So, on pages 12, 38 and 39 of the report you can see a few key figures related to the financial performance that management considers the most important for the business, and highlights them. That would be, for example, development of revenue, turnover growth. Here you can see that it grew by 2% after the drop in prior year. Then we see operating margins, which are declining year over year. Then come operating cash flow and free cash flow, both positive, which is a good sign for the business. You may have noticed that there are some captions which include the word underlying. Further in the report it is explained that this mainly removes the impact of foreign currencies. If you are interested in this topic, how foreign exchange rates impact the results of the business, drop a comment below. So here we have looked at the snapshot of the business. Financial statements themselves are usually shown towards the end of annual reports. Here they start on page 119, with the financial statements as we know them on pages 138 and 141. On page 121 you will see a statement of an auditor. Financial statements present a true and fair view on the affairs of the business, a fairly standard wording for the financial statements. These statements were prepared and audited in accordance with the UK adopted International Accounting Standards, which are based on International Financial Reporting Standards (IFRS). Also, it states that the financial statements were properly prepared. In the statement of auditors, you would normally look for a clean, unmodified opinion, meaning they were happy with the financials of the company. Let's have a look at the financial statements and start with the balance sheet. Yes, it's quite long. Let's zoom it in parts. As you can see, the structure is very similar to our Apple business. The numbers are a lot higher, of course, and there are more line items in it. But what you see, all are the familiar things to you. Same three blocks: non-current assets, working capital and funding. Total assets are around 80 billion. On top you have non-current assets, which are used for more than 1 year. What is interesting for us is property, plant and equipment. Here the truck from our Apple business would sit. This is around 12 billion here, way more than our truck of $150. What else do we see? What is familiar to us? Inventory around 5 billion. Receivables around 6 billion. Cash around 6 billion. Notice how inventory almost didn't change between 2023 and 2024, though the business grew, and cash increased by 2 billion, a good sign. Let's move to liabilities. Total liabilities are around 57 billion. Trade payables are about 17 billion. Short-term debt 7 billion, long-term debt 25 billion, so the business is partially debt-funded. Equity is 23 billion and also increased. Typically, that means the business has generated profits. Assets minus liabilities equals equity, exactly as in our Apple shop. Similar to our Apple business, if we add inventory, receivables, payables, other assets and liabilities, we would get to working capital. Now let's move to income statement. Profit size is huge, but the structure mirrors our Apple business. Sales, cost of sales, operating costs, tax. Revenue was around 61 billion, top line, just like the Apple shop's sales, but on a global scale. Operating profit was 9 billion with an operating margin of 15%. This is after all operating costs, but before finance costs and tax. Net profit was around 6 billion. And you may ask here, where are the costs? Great question. Do you see those small numbers under the head in notes? These numbers are the references to the detailed information disclosed later in the financial statements. Across operating profit, we see number 2. Let's check it out. Funny thing though, if you go to note 2, you will see details on business segments, but there you will find the reference to note 3. Here we have what we were looking for. No one said financial statements were straightforward. In note 3, you are now able to see the cost structure by function, similar to our Apple business. For example, cost of sales and selling and administrative expenses. Now let's have a look at cash flow. The profits are adjusted for non-cash items, for example depreciation. Then come changes in working capital. Exactly the indirect method we have learned. You see a lot of things as we had in our Apple business. Operating cash flow was around 9 billion. Investing cash flow for purchases of property, plant and equipment items was almost 2 billion. Financing cash flow was negative 7 billion, mainly because of dividend payments and share buybacks. Total cash flow was 2 billion and reconciles 4 billion in 2023 as opening balance to closing 6 billion in 2024. That's in short how the real-world financial statements look like. You see that a big household name like Unilever proves that the concepts you mastered with apples are identical at a global scale. Normally, audit of financial statements would provide additional comfort that the financial statements are correct. I don't want to scare you off, but sometimes unfortunate events do happen. The auditors can be deceived or defrauded and miss some things. There were quite a few scandals in the past, the most famous of which was the case of Enron. Then came Parmalat. Then came Wirecard, to name a few. A lot of such cases have some interesting stories, sometimes detective stories behind them, and have dedicated documentary videos. I will post a few links in the description, check that out. And if you want me to discuss any of these cases in the next videos, leave a comment. If today was helpful, hit like, subscribe and tap that bell so you never miss a lesson. See you soon.